In Europe, speed is not about shortcuts. Those complexities become your competitive advantage and ultimately your superpower. Luxembourg is less of a cost and more of a strategic anchor point for Europe. Yeah, I think Europe is a huge market. It's probably the world's third largest market at the moment. There are 450 million consumers in Europe, but it's very important to start. There are initiatives there such as SEPA, the Single European Payment Area, IOSS, Import One-Stop Shop, which allow merchants to settle their VAT obligations in a harmonized way, license passporting. All those initiatives make it easier and make Europe a single market. Having said that, it's a combination of over 20 or in the EU 27 sovereign countries. Each country has its own history, its own, in most cases, its own language and different consumer behaviors, and all of this adds complexity. Even more so, Europe is not just the EU. There are countries such as the UK, Switzerland, countries in Central or Southern Europe that are not part of the EU. So this yet adds additional complexity to enter in that market. Consumer behaviors and operational nuances. That's where complexity really comes in. Even with a single license and a shared framework, companies still need to account for local payment preferences, settlement habits, tax treatments, and also expectations from the regulators. If you want to consider Europe as your next market to target. So the companies that succeed tend to do two things really well. First, they build on the EU's harmonized foundations rather than fighting them. And second, they enter Europe with trusted, experienced partners. I think this is extremely important. So rather than trying to master every local nuance themselves, they leverage on partners such as PingPong, for example, to combine single market strategy with local execution. And this approach significantly reduces friction, risk and time to scale. So Europe's regulatory environment is one of the most mature globally, and it's increasingly one of the most forward-looking. So we clearly see a shift from just licensing being a milestone to more a continuous supervision as a process. And regulators now focus heavily on governance, safeguarding, operational resilience and AML effectiveness. So it's not just frameworks on paper. A major development I think worth highlighting today is MiCAR. So Europe became one of the first major regions to introduce a comprehensive harmonized framework for crypto assets and stablecoins. And this creates real clarity for enterprises looking to innovate in that space, especially around adoption and tokenized money use cases. Another trend that we see is functional regulation. So authorities increasingly assess what a company actually does rather than what it brands itself as. And this affects platform models, outsourcing, treasury structures or cross-border flows in many different ways. But as a result, those infrastructure decisions in Europe are no longer just technical. Companies value regulated partners who already operate under these frameworks and understand the supervisory expectations and can basically support innovation without regulatory uncertainty. So Europe has positioned itself not as a blocker to innovation, but rather as a structured environment where innovation can scale safely. So this is why the partnership go-to-market is so important. And it's all about striking the right balance. And this balance is one of the hardest challenges for companies entering Europe. And this is again where partnerships matter most. So optimizing purely for cost often creates problems later. So whether through regulatory remediation or operational limits or sometimes forced restructuring. At the same time, if you're overly cautious, your market entry will be slow and you're reducing your competitiveness. So in practice, the best balance is often achieving by working with the right local partner who's got the experience in regulatory, operational depth, but has also established infrastructure that can help companies move quickly without cutting corners. So this allows enterprises to separate speed from risk. They gain immediate market access through compliant, proven structures, while keeping the flexibility to optimize for cost as they grow. In Europe, speed is not about shortcuts, and I think it's crucial. It's about using existing expertise intelligently so that growth doesn't come at the expense of long-term goals. Luxembourg is rarely chosen for short-term and cost-driven reasons. It's chosen for strategic ones. It is one of a very small number of AAA rated countries globally. Even though it's small, it's within, I think it's 10 right now. It's one of those countries, and it sits geographically at the very heart of Europe. So if you combine this with the financial stability, political predictability and central location, it makes it uniquely attractive for global enterprises entering the European market. And beyond that, Luxembourg offers deep cross-border expertise. It's a tiny country that sits in the intersection of large economies. It's got a highly experienced regulator and an ecosystem designed around international financial flows rather than just domestic ones. So yes, operating costs are higher, but many companies find those costs are offset by faster regulatory engagement, clearer supervisory expectations, and smoother expansion across Europe. So for enterprises thinking about, or in terms of resilience and credibility, Luxembourg is less of a cost and more of a strategic anchor point for Europe. Europe is complex, and that complexity shouldn't be avoided, it should really be embraced. So companies that try to oversimplify Europe often struggle later as they scale and attract regulatory scrutiny. So those that accept complexity early, design for it and work with experienced partners, they tend to build far more durable businesses. The goal should be controlled speed, so moving decisively, yet on foundations that won't need you to rebuild your model every year. So when done correctly, Europe's regulatory depth, single market structure, and local diversity becomes a strength rather than an obstacle. So if you get Europe right, those complexities become your competitive advantage and ultimately your superpower.